All right, let's talk about the big showdown in India's stock market, BSE versus NSE. You've definitely heard the names, but what's the real story behind them? What truly sets them apart? And which one really runs the show today? We're going to break it all down. And look, we're going to approach this with a very specific goal in mind. If you've got an exam coming up, or you just want to get the core facts straight, this is for you. By the end of this, you'll know exactly what you need to remember about these competing exchanges.
Okay, so let's start with the OG, the granddaddy of them all, the Bombay Stock Exchange, better known as the BSE.
So the BSE's story is pretty incredible. I mean, think about it. It was founded way back in 1875. That makes it the oldest stock exchange in all of Asia. But here's the kicker. For over a century, it was all physical, open outcry trading. Then, bam, 1995 hits and they launched Bolt, their electronic trading system. That was a total game changer, taking it from the chaotic trading pits to the digital age.
And get this, the sheer number of companies on the BSE is just mind-boggling. We're talking more than 5,000 listed companies. This is huge, because it gives all those smaller and medium-sized businesses a place to raise money. And for you, as an investor, it means you've got this massive, diverse ocean of companies to explore.
So how do we know how the BSE is doing? Well, that's where the famous Sensex comes in. It's the benchmark index, and it tracks 30 of the biggest, most stable companies on the exchange. It's basically a snapshot, a quick health check for the whole Indian economy. When you hear on the news that the market is up, a lot of the time they're talking about the Sensex.
All right, that's the old guard. Now let's talk about the new kid on the block that came in and just completely changed everything. The National Stock Exchange, the NSE.
The NSE wasn't just an evolution. It was a full-blown revolution when it launched in 1992. It was built from the ground up to be India's very first fully automated electronic exchange. The whole idea was to be faster, way more transparent, and open to everyone, completely leveling the playing field.
And did that tech-first approach pay off? Oh yeah, the NSE quickly shot to the top as the leader in trading volume. Now why does that matter? Well, high volume means high liquidity. And all that really means is it's super easy to buy and sell shares without messing with the price. That's the holy grail for big-time investors and the super fast traders.
Just like the BSE has the Sensex, the NSE has its own benchmark, the Nifty 50. As the name suggests, it tracks 50 of the biggest and most traded stocks. So it gives you a bit of a wider view of the top of the market than the Sensex does. And today, it's pretty much the go-to benchmark for the Indian stock market.
Now, this whole idea of a tech-driven exchange, it didn't just appear out of thin air. To really get where the NSE was coming from, you've got to look across the globe to the original pioneer of all this stuff, NASDAQ. See, NASDAQ was the world's first electronic stock market, starting way back in 1971. They literally wrote the playbook for how a modern, all-digital exchange should work. And it was that very blueprint that the NSE took and ran with in India. And NASDAQ quickly became the place to be for all the big tech and internet giants. We're talking Apple, Microsoft, Amazon, you name it. It built this powerful reputation as the exchange for innovation and growth, showing everyone how you could dominate a specific high-growth sector. Okay, let's bring it all back home. If you're prepping for that exam, this is the part you really want to lock in. Let's boil it down to the absolute must-know takeaways.
This chart right here is your cheat sheet. Seriously, on one side you've got BSE, think oldest, Sensex 30, and the most companies listed. On the other side, NSE, modern, Nifty 50, much higher trading volume, and a laser focus on those big, large cap stocks. Get those pairings down and you're golden.
Let's make it even simpler. If you remember just 2 words for each, remember these. For BSE, it's heritage and breadth. For NSE, it's technology and liquidity. Heritage and breadth versus technology and liquidity. That's the core of it right there.
And that leaves us with a really interesting thought to chew on. As technology keeps getting better and better, the differences between these two are starting to shrink. The BSE is getting more high-tech, the NSE is getting older, so you have to wonder, will this rivalry last forever, or could we one day see them merge into one single powerhouse exchange for India? It's a huge question for the future of Indian finance for sure.